Trump versus Powell, inflation risk and Euro's rise, Fed political pressure. The potential fallout of Trump's decision to dismiss Powell, a looming threat of inflation and a declining dollar. In a landscape where economic stability is paramount, the prospect of President Trump terminating Federal Reserve Chair Jerome Powell raises significant concerns. This action could potentially ignite inflationary pressures and diminish the value of the US dollar. But here's where it gets controversial. The implications of political meddling in central bank operations are profound and far-reaching. According to a study referenced by economists at TS Lombard, political interference in the Federal Reserve's policy decisions has historically led to increased inflation and weakened risk assets. The research, conducted by economist Thomas Drechsel, meticulously examines presidential interactions with the Fed through diary records. It highlights critical moments when the central bank appeared to bow to political pressures, notably during Richard Nixon's administration before the 1972 election and throughout Lyndon Johnson's presidency. From this analysis, Drechsel developed a political pressure index that quantifies these influences. T.S. Lombard emphasizes that the findings of this study are particularly pertinent in today's context. When the Federal Reserve relaxes its policies due to political pressure, it often results in a persistent rise in inflation without a corresponding increase in real GDP. In fact, economic output may even decline. Furthermore, the study indicates that inflation expectations tend to escalate more sharply when such pressures are visible and widely discussed in the media. The economists caution that any attempt to remove Powell or replace him with someone more aligned with political interests could severely undermine confidence in the Fed's independence. You'd have to take a very short-sighted view to think this is good for risk assets, they argue. This scenario could also adversely affect the US dollar, particularly in the eyes of global investors. Interestingly, the euro might emerge as a beneficiary, supported by one of the most independent central banks globally, the European Central Bank, ECB. As we navigate these turbulent waters, it's essential to consider the broader implications of such political actions. What do you think? Could the potential firing of Powell lead to a significant economic downturn? Or do you believe that the Fed can withstand political pressures without compromising its integrity? Share your thoughts in the comments below.